Welcome, ladies and gentlemen, to another installment of Trader's Edge. Today we're going to talk about the surging growth of copper options at CME Group. Last year we did an update on copper options, and we had mentioned that average daily volume was really very lackluster, never more than 100, 200 contracts a day. But then our metals business group got together and they started an initiative and got some market makers in and did a push to certain users, and amazing things started to happen in the latter half of 2017. Volume went from a couple hundred to almost 1,000. Open interest also grew dramatically. As a result, more people became interested in it. We got more liquidity, and liquidity begets liquidity. And as a result, now I'm happy to report in the beginning of 2019, year to date, we've done about 3,000 a day, and open interest is near 35,000 contracts. So we've had spectacular growth in options on copper futures, which is tremendous for the user population because copper futures themselves are very, very liquid. They're the second most liquid metals product here at the CME Group, next to gold. But the options weren't doing very much. Well, that's all started to change now. Also, beyond open interest and volume, liquidity is measured in different ways. And we have a couple of the ways we measure liquidity here in the average bid-offer spread in volatility terms and in premium terms. You can see currently it's 0.50. It used to be 3 full percentage points. A lot of the over-the-counter options market and other players, they trade based on bid-offer spread in volatility terms. So you can see we've gone from, in 2017, for 3 percentage points down to 0.5 percentage point. So that's a dramatic move downward in bid-offer spread, much more narrow. Bid-offer spread in premium, which is what most people are used to trading in US dollars per pound, it's 0.035 now, and it used to be 0.018. So again, dramatic reduction in bid-offer spread in the number of ticks. Average top of book quantity back in 2017, 5 to 10 contracts, now about 75 to 100. Average daily volume, 3,000 plus per day versus 180 per day, and open interest 35,000 plus compared with 4,000 back in 2017. We have here also on-screen liquidity in terms of information, and the depth of order book transcends strike prices too. It's not just at the money, but you can see the depth of order book there. On the left-hand side, in general, you have the calls, you have the implied volatility, the bid on the call offering price, the implied volatility on the offer, and the quantity. You have the bid quantity and the offer quantity. Or so the 279 strike is 0.0285 bid, 0.0310 offered, and there's 11 contracts on the bid, 86 contracts on the offer. You can see there's pretty good size there along the entire range of strike prices there. On the right-hand side, you have the put options, and you have, again, the bid implied volatility on the bid side, the implied volatility on the offer side, also the 279, the premium terms, 0.0300 and 0.0325, and it's 51 by 40. So again, pretty good depth of mark and good top of order book depth there. One of the major market share owners for copper options is the London Metals Exchange. There's 3 major exchanges that trade copper futures, copper options. It's CME, London Metals Exchange, LME, and the Shanghai Exchange. With the London Metals Exchange being around for a long time and having a major market share. A couple of years ago, we had a market share that was basically 1 to 2%. Again, this initiative has attracted a lot of attention between institutions, commercials, dealers, fabricators, hedge funds, and as a result, our market share has climbed to almost 25%. That's amazing to go from a 1 to 2% market share up to 1/4 of the market share. Amazing. Again, a testimony to the liquidity of copper options and that surge in interest. We also have some sizable block trades now being transacted. Again, large institutions, if they want to do a very sizable trade, they can transact in the block market. And we've done blocks in the 500, 1,000 range, even higher, almost as high as 1,500 contracts. So very good market, not only on the central limit order book, but also via blocks. You can trade via blocks, which is a popular way of trading very large size transactions between dealers or brokers and investment banks and fabricators and things like that. It's a good way to get a very sizable amount done all at once. Trade. Key takeaways on copper options beyond everything we've talked about: liquidity, the depth of the order book, the narrowing of the bid-offer spreads, and market share continue to improve. Users are taking advantage of this new market maker initiative and all the new players that have come into the market. We also have a growing interest in block trades, as we mentioned, And the term Dr. Copper we've used before in copper futures and options on copper futures. It's just a term to use and gauge the overall economic health of the worldwide economy because copper is used everywhere. It's used in real estate, it's used in home building, it's used in making large commercial real estate ventures. It's a very widely used metal. And China still growing, although slowing down. They use a lot of copper. India, a lot of copper. The United States uses a lot of copper. So as a result, as the economies flux in, going up and going down, and interest in copper also increases, there's just a myriad of strategies for people to trade out there. So, as we always say, do your homework, particularly in options, and good trading to you.